And it's not just the crude prices which have continued to rise today. It also has to do with the sugar prices. Overnight at the ICE, we saw 6% of gains come in for sugar. This is after the Brazil drought concerns and, of course, the lower export numbers that the USDA threw out. Carlos Mera, as you know, senior commodity analyst at Rabobank, now joins us to talk more about that. Carlos, hi. Thank you so much for your time. What is your sense on the way the sugar prices in the international markets have reacted?
Hi, Manisha. Yeah, it was quite a surprising reaction yesterday. I mean, it was a 6% jump on the back of not much, really. There were no any strong fundamental news. What we have seen at the start of the year, especially last week, is that oil prices started to go up, and also the Brazilian real started to appreciate. And the correlation to the Brazilian real and oil prices, it should be very strong, because we are expecting an ethanol market next year where there's a surplus or a deficit. Will depend on what Brazilian mills decide to produce, either sugar or ethanol. But yeah, energy prices and the Brazilian currency going up, sugar prices flat last week. And we had only the reaction yesterday, which probably means that funds are trading a little bit different than normally, and that's probably because we don't have a CFTC report. The U.S. government is shut down, so the market doesn't really know what the position of funds is. So it's like completely new territory at the moment.
Oh, yes, it is. But the 6% jump, do you see a follow-through in that, or do you see it as a one-off? And with the kind of fundamentals that we're looking at in the international markets, what is your sense on sugar prices from here on?
Yeah, we're expecting an 8% increase this quarter, probably in the next couple of weeks, based on very strong currency in Brazil, and also dryness, well, in India, as I'm sure you're aware, in sugar regions there, for the last 5-6 months, and also in Brazil. Brazil is getting dry, and it's very, very hot in Brazil at the moment. So that's great to harvest, the remainder of this season's crop, but next season, we don't see much cane growth there.
Carlos, what's your sense for the Indian market, since you mentioned that here? Well, yes, we are dealing with some drought kind of situation here. But looking at the Indian situation where the sugar prices have continued to be fixed by the government, continue to be under pressure, how are you looking at the global numbers overall?
Well, next season will completely depend on the weather, etc. This season, I believe India is having a really good crop, probably larger than last year, probably larger than the market expects, and it has been coming very quickly. Globally, we are looking at a balanced market with sort of minor deficit this season and next. So, but still, we are coming from a situation of very large stocks as well. So, as I said, whatever Brazilian mills decide to produce will tip the balance one way or the other.
All right, Carlos, we'll let you go at that. Really appreciate you taking time out and speaking to us. So that's the view coming in. The 6% jump in sugar prices overnight was a surprise, but there is still some fund allocation to come this way, and you could see some follow-through buying, especially given the dry concerns in Brazil and in India as well. Prathamesh Malla as well now joins us with his sense on all of those commodities. Prathamesh, hi, good to have you. How are you looking at the crude oil prices to begin with? Because many of these commodities will now be taking cues from crude, where we have seen a 7th straight day of gains come in today.
Hello Manisha, I think 2018 was really not a year of commodities. You talk about metals, you talk about crude, you talk about, for that matter, gold and silver. None of the commodities have given any significant returns. In fact, all the metals and crude were dumped by investors across the globe. I think 2019 has started well for commodities. It's a phase of consolidation. If you see for crude, I think it's stabilizing around that 45-48 zone as far as WTI is concerned, and as far as MCX goes, I think 3,200, 3,300 is kind of stabilization zone. So I think the momentum has started to build up now. OPEC actions will slowly and steadily of cutting the oil output will take effect, and you'll see it in the price. Lower oil prices are really not beneficial for the producers of that commodity. I think some way or the other it has to catch up, and an asset will not fall continuously for a longer period of time. So I think some recovery is possible, and it's trading at around 48, 49 mark. I think very soon $52, $53 mark looks very much possible. But yes, volatility is the name of the game as far as crude oil prices goes.
Oh, absolutely. And you could be looking at more volatility as markets really brace themselves for the US-China trade talk conclusion today. And while, of course, it is expected to be followed up by a high-level discussion by end of this month, today, of course, is not going to be conclusive. What is your sense, Prathamesh? How are the metals taking cues from that? Are you making long positions on that?
I think, Manisha, clearly it was 2018 metals have been hammered, with more than 20% fall across copper, zinc, lead, nickel, and it really has to do with the specific fundamentals of the commodity besides the trade war between US and China that will take its own course of action. But whatever the issue is, I think some phase of consolidation will also happen in base metals, and we might see some recovery across the metal pack. I am not saying it's a complete U-turn in the metals pack. I think with all the events lined up, you will see a lot of action as far as metal goes. I think copper is something we prefer to be on the possibly on the sell side. On the buy side. I think in the near term, 470, 420 on the M6 is what we're looking at. But yes, it's not a complete change of direction as far as metal price is concerned.
Well, we get that, absolutely. Crude and copper a buy coming in today from Prathamesh. Of course, it hasn't been such a great day for the precious metal prices, 0.5% down for gold and silver both, but the industrial commodities are expected to do well. Prathamesh, thank you so much for joining us with your strategies. With that, it's a wrap up on this edition of Closing Bell. Thank you for watching.